We blew through $28 million. Don't ever call me again. That's the dumbest business ever. Greed kills deal.
What do you think your superpower is?
You don't spend any marketing to get deals.
Oh, you can't hoop? Can you hoop?
I can definitely hoop.
Can you hoop?
And I break my fucking ankle,
No
and I
way.
have to catch a flight 3 hours later.
When I was a kid, true story, when they'd say, what do you want to be when you grow up? I legitimately would put NFL player.
Wow. Bankability, delayed gratification, doing things the right way. You got to pay to play.
Welcome to the Deal Champs podcast. We got an amazing guest on today. We're down here at his MTV crib style crib.
Tony Stark, Iron Man himself, is here with us with his superhero built into the hill mansion. It's sick.
It's sick, bro. Thank you so much for having us at your house.
Welcome to my humble abode, fellas. And thank you for this beautiful gift. Amazing.
Of course.
You look great in it.
Thanks, fellas.
We'll do light intros. My name's Stratton Brown. I scaled 2 companies to 7 figures. Before I was 30, we built a 7-figure real estate portfolio. Nothing like Mr. Kepes here, but we're working on it.
We're trying, right?
AKA Strat Daddy. And then we have Mr. Captain America. Look at him. Looks like Captain
I like
America,
that.
right?
That's good, yeah.
Dean
We
Rogers.
can join forces.
I love that.
Iron Man.
Yeah, I like that.
You want to do any intros? Or do we?
Yeah, Dean Rogers, started my career in the NFL, then transitioned to corporate, then into real estate. Been doing real estate for a decade now. Done over 750 deals, 8-figure rental portfolio, trying to get on this guy's level right here. And Strat and I have Deal Champs community together. So if you guys want to learn more about that, you guys can go to dealchamps.com.
And then we have the $100 million man.
Hey,
He said he'd pull it out. He said he'd whip it out, supposedly.
He said that?
He said that. And he's the salt of the
I was
earth.
referring to tax returns. Tax returns.
He did say he would whip it out.
He said he'd whip it out. Mr. Zach Kepes. I interviewed Zach like 5 years ago on Zoom, and I just like randomly reached out to him. I don't even know how I got connected with you, but I reached out to you. Like, oh yeah, bro, let's do a pod.
Absolutely. I remember it was I remember a spiral staircase when you
Yeah,
interviewed
that was
me.
my staircase.
I remember everything. We did a casual Zoom. You had great energy. You were a hustler back then. I remember your football and athletic career.
Thank you, bro.
Yeah, it's good to see you in person.
You
First
too.
time we've all met, the energy is
Yeah.
electric.
We're having a good time.
There you
Well,
go.
give us a quick little
Quick intro. Zachary Kepes, company Zach Ventures, came out to Arizona in 2002, done thousands of deals, owned 300 plus single family homes out here. I only invest in Arizona, built the portfolio from 0 to the few hundred, and all I do every day is buy single family homes, mostly buy and hold. I do some flips and some new development, but my primary core competency is buy and hold single family homes in Arizona.
Do you think if you had more leverage on your portfolio, it wouldn't cash flow? So like my friends who own a couple hundred in Ohio, it's fucking brutal. Like the swings, just with CapEx and everything else. Do you think it would be that way for you? Or are you in like A class, B class assets? I'm really not stressing anyways.
No, I think if I added more leverage, I would always make sure whatever I'm buying, number one, has equity, and number two, it cash flows. Whenever I evaluate any deal, I'm always thinking, what's the worst case scenario? I'm not always looking, how much money can I make? You say, how much money can I lose? What's the downside risk versus the upside potential? So if I'm buying, I like 8, 9, and 10 caps, and if I can get leverage at 6, by default, it's going to cash flow.
Yeah.
So especially if you're not getting maxed out, you're doing something poorly. If you are deploying leverage and you're not cash flowing, there's a problem. Or your cost of capital is too high, or you're not doing proper remodels or stabilizing the assets properly, and you have all this CapEx after stabilization, there's a problem. You need to look internally versus externally.
Now, I know you said you were taking like a line of credit. Before you decided to do this, was it just all cash? Like, hey, I want a 10% return on my money. I know I can buy this. I buy great deals. I have my own crews, and I know it'll cash flow. Is it always a little bit of leverage when you're buying
No.
this
So when I first started, we kind of got into this a little before. It was no cash. It was OPM. I used other people's money. I gave in equity splits. I think it's really important for people coming into the business to understand all the different ways of structuring
You're
opportunities.
doing equity splits, huh?
Equity splits. I was 50-50 when I
So you
started.
weren't burning out, having
I
leverage
wasn't
from the
holding
bank.
anything in the beginning. In the beginning, I was like, how do I make money, right? Let me
Yeah.
get my feet wet. I would buy a deal, OPM,
So you didn't start
stabilize
one to
it.
buy
I
and
didn't
hold.
start buy and hold at all. I had to figure out, wow, and hindsight is always 20/20. You realize, wow, I flipped all these deals, and I look back and say, geez, if I would have stabilized and held this asset, and you go back and say, well, this thing doubled or tripled, I wish I would have owned it. But it doesn't matter. You can't,
You probably didn't have money to just go through that time period
That's
and wait
correct.
for it to double or triple anyway. So
Correct.
like most people, you gotta make money. So you got to find how to do that first,
Yeah.
and now you can invest.
Absolutely. How do I deploy the money that I'm making on these flips into an asset class that's going to give me a passive return to live the life you want to live?
Has buy and hold always been part of your strategy and your vision?
Not at all. I didn't know that was going to be part of it. I was just thinking, I came out, I remember America West Flight 5 when America West was in business, 2002, and I said, I want to become a millionaire. I didn't say, geez, I want to own hundreds of houses and be a landlord. I said, I want to make some money. What do I need to do to make money? I'm a hustler like you guys. You didn't just, arrive to the NFL through luck. You strategically put in the work, and, was that a dream of yours to be in the NFL?
When I was a kid, true story, when they'd say, what do you want to be when you grow up? I legitimately would put NFL player
Wow.
or basketball, NBA player.
Wow.
Like I would actually put that, and I'd be embarrassed to share it because to show with your friends, like, oh, I want to be a professional athlete is a little embarrassing because they're like, yeah, right. But I legitimately put that down because I wanted to be.
I love it. Which was better, football or basketball for you?
He can't hoop.
Oh, you can't hoop? Can you hoop?
I can definitely
He can't
hoop.
hoop.
This
He can't fucking hoop.
Can you hoop?
you-
We're going to
you
go to
don't
the gym after this. We're going to have a one-on-one.
This guy can't even run right now. He can't sprint.
Last time I was out here,
His ankle doesn't work.
like a
so-
couple years ago,
Yeah.
Steve was like, hey, I went on Steve's podcast, and he was like, hey, stay out a couple days, like we'll go hoop with some Mormons down like at the bottom of like wherever we are. I go hoop, and I go up for a layup, I drive, I make the bucket, I come down, I land on someone else's foot, and I break my fucking ankle.
No
and I
way.
have to catch a flight 3 hours later.
Oh, that's
And this
terrible.
shit was,
Oh, my God.
I had to get crutches in the airport. I'm in the airport. The guy who's pushed me through the airport rams me into a wall trying to get me in the elevator. It was the worst.
Well, welcome back to
So I
AZ.
love playing basketball.
Yeah.
I still play to this day. But I just realized that my height did not continue. I stopped
Yeah.
at 6'3", and I wasn't talented enough to make it to the league in basketball. So my best shot became clear in college. I'm going to play football. I'm going to go this direction.
Got it. Yeah, I mean, when I stopped at 5'8" in college, I knew that my NFL and NBA aspirations were done, so I just stuck to soccer and tennis and, went from there. So now I'm a pickleball star. Okay, moving on.
There we go.
But I can't remember, did you come from like a sophisticated family? Like where everyone's kind of in finance?
No.
Or money, or no?
I mean, I came from what I believe is a sophisticated family. My dad was an attorney.
Okay.
My mom taught senior citizens, and then I have two sisters, and they're both in the corporate
Did
world.
you think you were going to be an attorney?
100% no. I have ADHD. I can't sit there. It was never even a thought in my mind to take over my dad's firm. I always knew I was going to be an entrepreneur for sure.
You went to school for business.
Went to school
right?
for business at Indiana as a kid. You're selling the sports cards, you're shoveling snow, selling bagels. We did it all as entrepreneurs. It's in the blood. How can we make money? Bracelets, jewelry, you name it. Drugs, all of it. No, I'm just kidding. No
Where are you
drugs.
from originally?
Detroit. So Eminem was over here, and I was 2 miles north of him. He was 9 mile,
way.
I was 11 mile. Yeah.
But we looked at houses in Detroit. You cannot sell a house in Detroit as a wholesaler. We had deals come in.
Taxes are really high.
Are they really?
Oh, taxes are high there. I looked at a lot of deals when things were really depressed. The taxes on them are insane.
Like
Property
Texas,
taxes?
like Texas bad?
I think worse.
Property taxes or income tax?
Property taxes.
Property taxes.
Yeah.
Yikes.
Because like we had a house that we had at like 20 grand. It was in decent shape. The house next door, same model, sold for like 160, and we could not get it sold. We had Rob try and sell it, and Rob was like, "Bro, like we tried, we hate Detroit for this reason."
Interesting. Yeah, never bought there. I mean,
So have
there's
you tried other
areas that
businesses?
transact. What's that?
Have you tried other businesses before real estate, or it was just real estate and go?
No, I came out of college and I worked for a B2B e-commerce company in 2000 because I thought, hey, the dot-com era entrepreneur spine was, hey, don't pay me a salary. I think they paid me 45 grand and give me a ton of stock options. We blew through $28 million of venture capital. I was like, well, I'm gonna be retired at 25 or only, revenue generation was from our candy machine in the basement. That was the joke. It's like, how much money did we make this quarter? We blew through $7 million and we brought in $300 selling Snickers to ourselves. It was pretty funny. And then I worked for a human capital consulting company after that because the people there liked me. I'm a sales guy and personable and whatnot. But that was just so boring. And I realized corporations are not for me. I had 2 stints on Wall Street prior to that as internships.
What was that like? What'd you do there?
I created zero-cost collar options for high net worth individuals. So during the dot-com era, companies were being acquired for stock. And Rule 144 means that if you get your company gets bought out by AOL and your company gets $400 million, you as a shareholder, as an equitable partner in that, you couldn't sell immediately because it's restricted stock based on the transaction. So I call you up and say, Dean, congrats, you just made $200 million in this transaction. What if that 200 goes to 50? You're like, oh, that would be terrible. I said, yeah, wouldn't it? But what if it went to 800 million? You're like, well, that's great too, but I'm happy just to protect my 200 million. I would create buy and sell calls and puts on that stock to ensure that we mitigated the risk in the market to make sure you walked away with your 200 million. Because it'd be horrible that you did all this work to create $200 million, but it evaporated in 6 months based on market volatility. So we put strategies in place to bring you in as a client, bring that liquidity to Prudential, get fees and all that, and ensure that we're protecting and mitigating risk, that you don't lose that hard-earned $200 million.
So were you calling people who had stock options in tech companies that IPO'd and essentially being like, hey, you have equity here?
100%. I would see the latest transactions or who's getting acquired, and the latest, you're watching the market, who's getting, so-and-so made a bid for some other company. I would get in their ear, hey, listen, you're about to get acquired, or you obviously know what's going on. Let's protect that money. They're not aware that that's tied up for 6 months.
Yeah.
So we would be, the early bird gets the worm. It's like chasing a wholesale deal. Hey, I saw your estate sale. Are you going to sell the house? It's like same philosophy.
That's nuts. How long did you do that?
I did that for 2 summers. So I lived in New York City for 2 summers. I did that for Prudential Securities, and I worked with Sony Music. They had an independent label called Tangerine Records. So any artist or groups that they signed, some of them were like with the Ramones, Aini Kamoze. Remember Aini Kamoze?
No.
The Miracle Gangster, the one-hit wonder. Aini Kamoze?
No.
Whatever. I'm the Miracle Gangster, word up. You don't know that song?
No,
Do you?
Unfortunately not.
Not at all, bro.
I'm dating myself here. Anyhow, great music. The bottom line is these guys had a private label. So if Sony didn't take a big group or a music a movie opportunity for these songs, the independent label could sign them, but they needed to raise money. For some reason, I'm pretty good at raising money, so I created a business plan for them to raise capital to sign these groups to their private label. So Sony had the first dibs, but the R&D guy had their own independent thing. They'd present it to Sony. Sony would say, sorry, we don't like them. He's like, cool, I'm going to put them on my private label. So I did that. So it was a great experience.
What do you think your superpower is? Sales or raising money? Or one and the same?
Relationships, building good long-term strategic relationships, treating people well, asking questions, being consultative, figuring out how to create win-win situations.
So it's a good segue. Yeah. From what I can tell, you don't spend any marketing to get deals. It's all relationships.
So in the beginning, I did spend money. We were spending $65,000, $70,000 a month on TV,
Really?
billboards, radio. Oh, wow. We had a company called 1-800-NO-AGENT.
You've done it all then.
So we did that. But after a while, when you have a good reputation, you do good business. It's like going to a restaurant and you get the 5-star Yelp review, and everyone, oh, you got to try this restaurant, the Dean's Restaurant, Stratton's Restaurant. It's amazing. People get excited about it. They had a great experience. They want not only the food, the ambiance, the service. Well, you create that 5-star experience in what you're doing, you're going to get residual business. And so that's kind of how, when I stopped marketing, and then you got all these referrals, then it just happened.
And you're one of the guys who taught me when I first got going, to where if someone says they'll take your number and you're a new wholesaler, just fucking take the number and move on, because that's how you do good business.
100%.
Because a lot of people who get into the business, like wholesaling is such a wild, wild west, land of the dipshits, for like a lack of better words, because there's no business experience going into it. Mm-hmm. So you don't know how to treat people.
Sure.
Right, and do the right business. And I'm listening to you like, bro, if someone gives you your number,
right, you
probably did fuck up, just take it, move on. And build the relationship, but don't go back, say, hey, I can't do it anymore. I'm waiting for more offers.
Right, that's the worst. I mean, I can't even express or stress how dumb that is, because you have a real buyer. It's like you have a fish on the line, ready to hook, bring in the boat, and you look at it and you know you can eat it for dinner, and you're like, I'm gonna wait for a bigger fish, and then you catch nothing. You're an idiot. But it also tarnishes the relationship. You call me up, you said, Zach, I got this deal. Here's the pictures. I know the market extremely well. I say, yes, Stratton, I'll buy this for $250, and you're asking $250.
Done.
It's one thing if I offered you $240, and you're like, well, hey, I'm gonna try and get $250, but I'll let you know by this time frame. That's cool. But if I'm offering you full price and you're saying, I'll let you know, don't ever call me again. That's the dumbest business ever. Greed kills deals. Move on. Why? What are you waiting? You're getting your number. What are you
You're getting your number.
For? Yeah, have a nice day.
I've dealt with that as a buyer as well. Here's your number. Okay, I'll give it to you. Well, wait till Friday, see what happens.
No.
Give your highest and best. I'm giving you what you want. So I know exactly what you're talking about.
It's the worst. I will, and I even to this day where people, wholesaler will call me today and say, hey, I apologized before. Don't ever call me. I said to them, I'm going to give you 30 seconds to think about what you're doing, and if you don't take my offer, that's fine. So I don't need your deal. I don't get emotional over deals. It is what it is. We talked about emotionality in business. You lose your emotion, you lose the opportunity, you lose the deal. I always know that there's an abundance of opportunities. It's just one deal, there's many behind it. But you treat somebody like that and you're greedy. I don't want to work with you. Why am I wasting my time? You gave me a number, I committed to you. It's not like I have terms or contingencies. So what are you waiting for? Don't waste my time again. Never call me again. It's a waste of time.
And so do you add them in? I feel like you have this type of energy. Like you'll add them in your phone, like blacklisted.
Do not DNR.
Like,
do not respond. POS. Piece of shit. Have a nice day. And not only that, when people say, "Oh, Zach, you know so and so," let me look. Yeah, POS. Piece of shit. Do not respond. Greedy motherfucker. Yeah.
Hell yeah.
Savage.
So you did the option stuff for 2 years in New
I did
York.
the options for one summer, and then I did the Sony for another summer. Yeah.
What did you learn from those two experiences that have helped you out to get to where you are now?
I learned that working for a big firm and when coming, it's funny, as a business student, I want to be an investment banker. I'm going to put on the suit.
That is like the way.
That's the way. It's like, I'm
way.
going to become a multimillionaire and I'm going to wear the suit. I'm going to be an investment banker. What you don't realize by doing that experience is you're selling your soul to a corporation. Everything you're doing is for them. They're paying you. When you break down your 20-hour days and 18-hour days, they're paying you $30, $40 an hour. And of course, you're saving all your money, but you're not living life. You're just burning the candle for somebody else's benefit. It's like the saying the boss goes to you and says, hey, you did a great job this year. You see this new red Ferrari. If you keep doing what you're doing, next year I'm going to get the new version for myself. It's like, well, that doesn't help me, So I realized, again, as a true entrepreneur spirit, I want to do this for myself. I want to build my legacy, do what I want, when I want. I don't like people telling me what to do. Grateful for the experience to see. It's nice to have these internships and experiences and see how Wall Street works and how it's all about inside information. In fact, what I leverage from Wall Street is real estate is a microcosm of Wall Street. It's like we have the ability to move the deals. It's like insider trading, right? Institutions make money because they're the big players communicating privately, doing insider talks and communications.
100%.
But in real estate, when you guys join forces for your great community, you bring 700 people in a room, people start talking, and oh, hey, I'm a buyer of that. Oh, let me help you on this. We can collaborate and work together so everybody wins. That's the beauty of real estate, and it's legal. Hey, man, guess what? I just got an offer on this property. You should buy in this neighborhood. This is a really good deal. I see you have this under contract. We're helping each other win. There's nothing illegal about it. It's illegal to talk. So if you have one company on Wall Street publicly traded and I'm selling or shorting it, that's illegal, right? I'm taking insider information,
trading,
I'm trading on it. That's illegal. In real estate, it's legal. That's the beauty of creating great friendships with like-minded, good entrepreneurs to see each other succeed and win together and break bread and have a drink or a soda or whatever it is. That's the beautiful thing about real estate.
We were talking about delayed gratification earlier.
Yeah.
You've been doing this for 23 years.
Yeah.
Did you get results right away and you were just crushing it, or what has your journey been like?
Yeah, nothing happens and nothing good. If it was too easy, for example, and we call it the cocaine mentality, right? You snort the cocaine, you get high, and then you calm down. Supposedly, I've never done cocaine. But I mean, that's what I've been told. But in real estate, it's not about the booger sugar. It's about the delayed gratification. When I came out here, I didn't know anybody. I didn't know anything much about real estate. I got my license in 9 days, which I'm a huge advocate for. We didn't talk about that. But I love having the license and full disclosure and transparency and doing good business. So I learned, getting the license, going out, shaking hands, showing up. It's a long journey. It's a grind. I mean, maybe my first year, I don't know what I made. I made less than $100,000, I'm sure, my first year for sure. But then, you get this learning curve and execution and relationships. It's like planting seeds on a farm. You don't just plant the seeds the next day, you're harvesting and eating, right? It just doesn't work that way. Same thing in the gym or going to the NFL. You don't just catch a football one day and say, I'm going to the NFL. You go to the camps, you train. It's the same thing. You're putting in the reps, you're perfecting your expertise on a daily basis. I know it's monotonous, but by being in that monotony and that boring mentality, but mastering it enables you to win at a big level. But a lot of people give up and they get distracted by all these things. They get bored with the monotony and they don't become an expert at one specific thing. They want to do everything. I think it's really important to hone in on your craft. Once you realize, hey, you're not going to go to the league for basketball because you're only 6'3", you realize, all right, I'm going to go all in on football. And you master that. You didn't try and do a dual athlete probably or a triathlete. You just figured, I'm going to go all in on football. I said, I'm going to go all in on single family homes in Arizona. I'm going to know the market so well that when Stratton calls me on a wholesale deal, I don't like flinch. I'm going to catch it and I'm going to take it and I'm running in for a touchdown because deals move very quickly. If you flinch, you're out.
Yeah.
So I want to know that market so well, so precisely. When people call me, I give them an answer in 30 seconds.
How long did it take you to feel like you made it?
That's a good question.
Probably a solid couple of years. I mean, the goal is to become a millionaire, and then you make $1 million, and it's not what you think it is. And money doesn't buy happiness. It certainly helps. But it was just about, I moved into my home that I built in DC Ranch. I was the youngest guy in the community, bought the fancy Mercedes, everything I'm against. My buddies came to visit and they're like, are you selling drugs? Like, what are you doing? How'd you do this? I think seeing that outside perception from your good friends and kind of getting that reinforcement of like, wow, nice house, nice car, you're doing this, you're doing that. Then I was like, oh, you kind of, have this internal, reflection and reaction. I'm like, okay, I'm doing pretty good. But honestly, I feel like I grind every day. I have this grinder's mentality that I still don't feel like I made what? Like, I just love the opportunity of deals. It's not like there's a certain number or a figure or an asset class. It's just doing deals, having fun.
What does your day look like?
My day is I'm a monotonous guy. Wake up, take care of my 2 pups over here, my dogs that you guys met. They love you. They also love the dog trainer over here. He's great. What do we call him?
Caesar Milan.
Caesar Milan is here behind the scenes taking pictures. Wake up, feed, take care of the dogs, eat a healthy breakfast, go to the gym. And then after that, it's all deals. Focus on what makes money. It's acquisitions. You make money on the buy side. So focus on cultivating those top relationships that I have that we spoke about off camera before.
So are you just pounding the phone, talking to wholesalers, realtors, everything like that?
Not anymore. Now they're coming to me because I'm the guy for single family homes. They say, hey, Zach, I have this wholesale opportunity. Or Zach, I'm an agent. Or you have a seller in an estate sale. What can you do? Or what can you do? So I'm evaluating these opportunities, being very responsive and sensitive. Time is money to those opportunities. Underwrite right away.
Just kind of sitting back and they're people
coming
are
at
reaching
me.
out and
That's
you're just
correct.
ready. You're just hammering through them.
They call me, text me, email me. I go through. I know the top priority, right? You develop your strategic relationships with
like
the top
this guy
people bringing
sends
you
us the most
deals.
business.
Sends me the most business. He's number one. I'm going to look at his deals first, of course. There's a pecking order. And then from there, you just keep going down the line. And then in the interim, while you're doing that, you manage your maintenance guys, your tenant calls, my assistant, the construction, the designer. I mean, there's all these other moving parts. But the most important part of this business is cultivating and maintaining those relationships and being highly responsive to people bringing you A-plus deals. Money's made on the acquisition and then value add through construction and stabilization.
What's an average month look like from deal volume standpoint?
Like how many deals do I get in a month?
Yeah.
There's junk that's sent to me.
How many do you take down usually?
It depends. A good month would be 8 to 10 a month.
Okay.
Yeah.
That's solid.
Are you holding most of those, or like
Mostly holding.
Most of them
crazy.
holding.
So like you're adding $100,000 to $200,000 a month in net worth.
No, it doesn't really work. Well, technically, you can't say what you're adding in terms of net worth. The key component, what I look at, and I think is very important, no one talks about, is when I acquire a deal, I say to myself, this is a very simple thing for your listeners. What happens when I digest this opportunity, right? Let's just use a simple deal. I closed on one yesterday, I'm closing one on Thursday, another one on Friday. I'm buying this deal, for example, this one on college. I'm buying it for $260. It's worth probably $350. Maybe it needs $20,000.
Okay.
So if I buy this deal, it's a very solid single, maybe a double. What happens to my net worth, number one? Does it go up? Does it break even, or does it go down? Clearly, if it breaks even or goes down, I wouldn't buy the deal, right? But if I stabilize this deal on one deal, this is so powerful. What happens to your net worth? I buy at $260, I put in $20, so I'm in it at $280. It's worth $350, so I have $70,000 of gross equity. If I go to the bank and I list that college deal as an asset on my personal financial statement, my net worth on paper goes up $70,000. Does it not?
Yeah.
Yeah.
There you go. So you say in 1 month your net worth can go up 100 or 200. But the reality is if I bought 8 to 10 deals,
times 7.
it say 70,000 in gross equity, technically, if I'm buying right and this is factual information, my net worth can go up $500 to $1 million in a month.
Right.
That's nuts.
But it's facts. You know
It's
real
facts.
estate well. Tell me it doesn't.
It's 100% facts.
Right.
And at this point, your rental income, because you said you're paying for most of these cash. So are you mainly taking flip income and buying and holding, because you're mostly buying and holding, or are you mostly taking cash flow from your rentals and using that to buy more rentals?
What's up, Deal Champs? I hope you're enjoying the podcast. I want to take a second to tell you a little bit more about the Deal Champs community. If you're looking to be around other real estate investors doing deals with the common goal of building a business of freedom to live the life you want to live, then you need to get the right information to be successful and the support to do it. If that sounds like you, Deal Champs community is the right fit. Just head over to dealchamps.com to learn more and apply. Now let's get back to the podcast. Let's go.
So I love leveraging the cash flow from the rentals because it's a high yield. And then I take the cash flow from the rentals to pay down because I use lines of credit, which is cash, collateralized against unencumbered homes from my portfolio. So immediately I take that cash, pay down line of credit. So I'm getting a yield of, call it 6.5% on the line of credit. When the opportunities come, I just pull from the line of credit to buy a new deal. When you pull from the line of credit and you buy that new deal, there is no debt on that new deal. It's from a line of credit. It's already encumbering an existing asset. So if and when I need, we talked about scaling, and I'm going to pull maybe 10, coming up here shortly. I've been working this deal. And how does that work? I just take unencumbered deals. I pledge those large cross-collateralization of unencumbered deeds to the bank, and they increase my line of credit. From that line of credit, I continue to grow and scale. The key component is all that equity in the portfolio is the key component. So many people are just thinking, hey, what's my cash flow? In order to cash flow, a lot of things have to happen. One, you need cheap debt, number one. Two, you need good rents. Right now, there's some compression on rents, and debt is not that cheap, so it's hard to cash flow per se.
It is.
Or you have to have true cash. Yeah, obviously, if you're paying true cash, your cash flow is 100% because, there's no debt. So, of course, you're cash flowing unless it's vacant.
So how does that loan work? Is it a blanket loan, or are they each? You don't sell anything, right?
I do sell, absolutely.
Okay.
I mean, even right now, I probably have 10 or 12 single-family homes for sale. Because after
And are those rental properties or flips?
mostly longer-term rentals, but again, in a market where it's a little frothy,
So
and there's an opportunity
you will trade some of your rentals.
I'm happy to trade, right? Because I know what I can do. It's called dollar cost average. So I can take something that I've owned for a long time, my basis is low, and the market's appreciated. You're never going to go broke taking a profit. I'm never scared to sell an asset at a retail price because I can take that money and I know I can recapture new equity. If I can buy stuff at 75 cents on the dollar, I'm redeploying that money strategically. In addition, by selling that long-term asset, I'm only paying 2 or 23% long-term capital gains on it. I'm not 1031 exchanging. And I'm bankable. So by doing that, it also proves the fact to the bank that, wow, this guy has a great system. He's proof of concept time and time again. He's got the cash flow from the rentals. He also buys these things well. He's proven that he's buying strategic assets. He's buying here and selling here, and the banks feel comfortable, right? The worst thing ever is these people don't pay taxes, okay? Yeah. And you go to the bank, and you may have all this unencumbered, property, and they said, hey, you're not financeable, you're not bankable because you're not paying taxes, you show no income, and you shoot yourself. So going back to your original question of delayed gratification, bankability, delayed gratification, doing things the right way, you gotta pay to play. And that's what I've done for 23 years. I still pay a shit. Everyone says all these people brag, I pay no taxes. I don't know what you're doing, but I know what I'm doing. Yes, I pay a lot in taxes, a lot, but guess what? That enables me to grow and scale internally without outside capital.
When did you realize you had to pay taxes? I was on Brad, our good friend, he was like, Stratton, I pay a lot of money in taxes because I know I have to go to a bank, and he's, I think Dean's age, and he's worth like a couple hundred, like 100 at least. Mm-hmm. He's like, I have to pay taxes. Like, when did that realization click? Because growing up into the space, I never wanted to pay taxes. And then it's like, oh, wow, I do have to pay taxes. Like, when did it click and you're like, okay, I need to actually be bankable?
I think I always know. I think, fortunately for me, I grew up in a pretty savvy family, and dad being an attorney, and he was big into, my dad made a lot of money in law, but he made a lot of money investing in stocks and private placement and outside companies. So I was always aware that there is a thing called taxes, and hear him talk to his bankers and different people. So strategically, I guess I'm blessed that I was socialized to have an understanding of the implications of doing good business and taxes and growth and all that.
Okay. Yeah. How many of your friends ended up on Wall Street, and then they see what you're doing, like, hey, how can I get into this?
It's interesting. I came out here solo, so a lot of people. My dog's eating the other dog's food. It's so funny. The guy's such an animal. He's a savage. Buddy, leave his food alone. Buddy, would you mind just pulling that bowl so he doesn't eat it? He probably already ate it all.
It's gone.
That's it. It's gone for sure. He's a savage. It's probably gone. So going back to did he eat it all? Yeah. He's an animal. Thank you. Buddy, my best friend. He's the best. Onyx is pissed that he ate his food. All right. So reverting back to your questions, what you get here, the real deal. You big eater. You want to make a little cameo? Buddy Jones, ladies and gentlemen. My best friend. I have a lot of friends that want to invest passively. It's funny. A lot of people want to be in real estate, but they don't want to do the work. They don't want to do the work. I'm not afraid. Listen, I'm not good at construction, but I'm not afraid to drive anywhere at any time or roll up the sleeves or diffuse situation. I'm the guy that runs into the fire. Not a lot of people like to be around that heat and the smoke. That's what real estate is. It's putting out fire. It's putting yourself in these precarious situations and, solving problems and quickly and efficiently and diffusing, hardships and problems. So everyone wants to make the money. Nobody wants to do the work. And so they're like, hey, I'm happy to lend. I'm happy to be a, equity partner. But no one wants to go out there and grind and walk through trashy houses and put on masks and suits and all that stuff, hazmat suits, not regular suits, to look at this, these disgusting properties.
Do you still have everybody reach out to you to lease units? Like you are your own property manager?
I'm vertically integrated. We just started with Appfolio, which helps from a technology perspective. I don't necessarily love it yet. I'm getting used to it because I'm an old school business guy. So my assistant handles the rents. So when people pay, it's not like, hey, Zach, I paid my rent, but they can text me or they're going to call my assistant or text receipts. Now that I can obviously pay online, which helps that communication and streamlines it.
You just moved to pay online?
Yes, just moved to pay online.
Can your people
What was it before? Hand you cash?
Never. No. They could go to the bank.
Get the money orders and the cashier's checks
100%,
and stuff like
but not direct to me because that takes up too much time. I don't want to be distracted from deals.
Okay.
There are some of those people that are afraid to go to banks or they don't have they don't have their ID or they're nervous about stuff. And I feel bad for them and I'm happy to work around that because I respect the community, by the way. And so if I need to help you do that and you don't want to go to the bank and you're nervous about something, we'll work around it. But at the end of the day, I'm a transparent, fully reporting company. So it's not like, here's cash, great, go to the bank and deposit. Or go have my assistant, go meet my sister or my handyman or my leasing agent to pick it up and we're going to deposit and send you a receipt. So yeah, there's a lot of work doing that. But I also think that if you outsource to a management company, nobody cares more about your assets than you do. And it's, again, going back to relationships. When you know your tenants, and I say this all the time, no tenants call, Blackstone and say, hey, Blackstone, come over for Thanksgiving or Christmas. What do you tell? There's no relationship. They treat them like an annuity of income. When they say, hey, Stratton, thank you so much for taking good care of me. Thanks for being lenient on our rent this month. The last few months, you really helped our family in a hardship or COVID. Why don't you come over? I have, homemade tacos. My grandma's visiting from Mexico. And you'd say, absolutely, let me come over. What can I bring? Corona? Can I bring chicken? Well, what do you need? It's an amazing thing that people undervalue these direct relationships with people. These are the people that are living in, their biggest investment of their life, which is your home. And you treat them well, they're going to treat you and the property well. So it goes hand in hand. It's baffling to me how people just don't want to have relationships with them. And, hey, talk to this person. I don't want to be involved, when it's simply a phone call. It's an energetic exchange. I think that's the secret sauce of this business, is these relationships. Being accessible, being human to these people, not just some, oh, you're the owner, whatever. I'm just like you. How can I help you? How can I serve you? Here, let's fix this. Let's roll up the sleeves. That's the key.
What does your portfolio look like as far as A class, B class, C class, D class?
We don't really, classify in the single family space like you're talking more commercial, but I get what you're saying.
I know neighborhoods that I'd want to own shit in.
Sure.
And I have a house in a neighborhood to where it cash flows, but Jesus Christ, that's a fucking sketch ass neighborhood.
Great point. So I typically only want to buy stuff, especially at this point, where I feel comfortable driving there at, 10 o'clock at night by myself, unarmed, fully exposed to go into that fire.
Yeah.
I'd call that, B plus neighborhoods.
Yeah.
Do I own some C stuff? Yeah, I own some C stuff. Would I go there at night? I don't love it, but I would do it, but I would be a little uncomfortable or maybe bring one of you big fellows with me. But so it looks like the real money's made, we talked about this a little bit before, in terms of development and owning the right assets. In order to cash flow, there's typically an inverse relationship between price and yield, okay? So if you're gonna own a $500,000 house and that rents for $3,500, or you own a $250,000 home that rents for $3,000, of course you wanna own the $250,000. You're not getting paid appropriately to take on that $250,000 exposure for the improper yield. So the average, what you're getting at is most of my homes are $450,000 and under. That doesn't mean that they're C houses. A lot of those are B, B+, A-, whatever. I mean, typically you're gonna say an A home was Paradise Valley, right? Whatever. But so I'd say most of them are, C+ to B on average, and there's some floating that goes up to the A, and there's some stuff that probably goes down to a C-. Maybe some townhomes or, stuff that I bought in 2009 that I'd be a fool to sell that my basis is $20,000 and it's worth $300,000 today. How do you sell that?
Do you go through like a trimming process through your portfolio and try to take ones out that aren't performing as well, or that are a hassle, or that are not in the neighborhoods that you really want to deal with, and try to trade up to nicer ones? Or do you just kind of look at, here's my basis, here's my return, I'm not really worried about it?
That's a great point. I believe in a good economies of scale. So in doing that, I like to stay in a 50-mile radius, because when you're vertically integrated and you've got management and handyman that's servicing these, or two people, or the AC companies, they don't want to drive 100 miles. So you have that anomaly home that you buy because it's such a good deal and you can't pass it up. But then you realize when the tenant calls, it's a full day to drive there and come back, or there's an issue. It doesn't make economic sense unless it makes monetary sense on the acquisition, that you're willing to outsource or pay a local company to go out there and service it and get screwed, and pay a premium. So it all comes down to price and class. I like having diversification, but I like having that 50-mile radius in terms of speed and getting somewhere quickly and efficiently and resolving problems. But it goes both. It goes to certain areas are trending, like East Valley right now is hotter than West Valley, for example. So would I want to diversify and maybe pick up some more in the East Valley? Sure. But it's just easy for me to go to the West Side. It's also, when you're dealing in these tight communities, it's easy to procure new tenants, because everybody. These relationships are key. They're self-serving. It's like, hey, Zach, when's your next home going to be on the West Side in Avondale or Glendale or Surprise? Oh, I got 20 to choose from. Send your friend and I'll get them in a home tomorrow. Versus, oh, I got some home 80 miles away. I'm not even driving there on the weekend. I go show the property. So it's a combination of both. In certain homes, by the way, have stigmas to them. Like, it's really weird. I'm sure a lot of you guys have experienced this, where you have a home and you get a bad tenant for whatever reason. It attracts, it's just karma in the property, and you're like, oh, let's not get rid of the house. Let's get rid of the tenant, because there's whatever.
But
then the next tenant comes in there. Yeah, next tenant goes in there. Same thing. I've had a home where I've had 3 evictions, and I'm like, my assistant's like, Zach, we need to do one of those like clearing and smoke and let's clear the energy space. Cleanse, and I'm like, no, let's sell the house. It's like, you don't want to be emotional. I'm not selling the house, but like the thought, you consider like, there's just something wrong with the house. Nothing physically, but it's just like spiritually, it's a bad energy. It's like a bad relationship, right? How long do you stay in that?
We just sold a sixplex that just had all sorts of problems with it. Weird people moving in. Yeah. It was in a small little town. Financially, we did well on it by selling it, but we didn't want to deal with it anymore.
Right.
And we do have a property manager, and he was like, thank you for selling that
one.
You
know that that's a bad apple when a person who is creating revenue for themselves is thanking you.
Yeah.
You're like, oh, okay, that makes sense. So some of it is not even, financial or monetary. It's just energetic, right? It's like when you have friends that are hanging around with a bunch of people and someone invites another buddy or a girl in the area and you sense an energy shift, you got to get rid of the toxicity. You got to evaluate, and it's important to evaluate and take note. And by the way, if you're dealing with limited capital, no one has unlimited capital, you want to evaluate and take perspective of, hey, what is the yield on this? Can I get a better yield by selling this and procuring, hey, what are the new assets trading for today? It's important to follow those trends and stay abreast of what's happening. And is this the highest and best use of my capital today? Or can I maximize it by making a trade?
So you are looking at like, okay, the yield on this is no good. Like, we should trade up into something else. I know I can get a better return.
You should always look at that. Am I the greatest at that? No, because, there's a lot going on all the time, but it's a very important factor to consider. It's like looking at your stock portfolio, every couple months. If you're just ignoring it, you don't even know what's going on. What are the trends? What's happening? Why is cannabis stocks trading down? And why are AI companies doing this? And should I pull out of my cannabis and move to AI? It's the same mentality with single family homes. What areas are trending better? Where's the big companies moving to? Where's their demand? Where's their higher level of occupancy? Why is occupancy lower here? Why are people moving out of this neighborhood? There's some structural stuff from the builder. Like, you got to stay on top of it. This is a lot of money. It's important to gather data, digest, and make proper decisions.
Where are you getting all this data? So like my dad was like, you need to read the newspaper. He's like, the reason I read the newspaper is because I know exactly what's going on. Like, same thing, pulse in the market.
Yep.
I can read it and I can understand what's going on. So where are you getting all this information to be able to make these decisions?
Just like you guys created your deal champs, right, and your meetups. First of all, by being on the front lines and rolling up the sleeves and not being a passive investor versus being an active investor, we're on the front lines. I'm getting the data daily. I'm getting feedback from my rental agent or from myself when I'm showing a property to tenants, or I'm buying a property, I'm speaking to the neighbors and say, how much are you renting this for? Or calling a FSBO owner. I'm aggregating the data on the front lines day in and day out. I'm calling title companies. What's your deal flow? Have you had more wholesale deals? What's going on with the retail market? I'm going to the meetups. I'm talking to guys like you. I'm talking to other colleagues, the wholesalers. Hey, what did that deal that I passed on? What did that deal trade for? So many people just say no and they just move on with their life and they go think about what they're eating for dinner. I'm genuinely curious, and you're fixated on aggregating the information today, because yesterday's news. I want to know what's happening on the forefront today to make the decisions. Or, you sold a wholesale deal and it sold quickly. Why did it sell so quickly there? What was so important or so desirable about that neighborhood? I want to know. I don't want to just sell the deal, move the paper. I want to delve a little bit deeper. Take the time to slow things down, be consultative, and ask the critical questions so that you become the news ticker. Not reading it, you're writing it.
I love that, bro. So we have the return on equity. When did you stop giving up equity in the deals? Because like you said at the beginning, it was other people's money and you were doing equity splits. At what point in time, you're like, okay, I have enough demand now with whatever it is to where I don't have to do that anymore?
Once you become bankable. So a lot of times when our market imploded in 2009, 2007, 8, 9, banks were averse to, they wanted nothing to do with single family homes. So what were your options? You either had to go into your piggy bank or find other capital partners and joint venture and give up equity to grow and scale. Or hard money, but hard money was crazy. And there wasn't even that much hard money back in 2009. Now everyone's hard money, right? Everyone wants, in fact, loan money, 12%, 13%.
Do they bang down your fucking door, bro, to like lend you money?
I get cold calls from hard money lenders. You got to be getting blown up.
You
or
have
maybe
to be
you don't because you're
blown
not
up, bro.
getting that many. I think a lot of them are cold calling because you've used a hard
flip.
money
That
lender
makes
in the
sense.
past.
Yeah, and so they could pull, recorded deeds. Exactly. So I'm not as much as you would think, but people, new companies call me, bigger institutional money calls me and said, hey, do you need some debt on your portfolio? I get that a lot, versus not the one-off guys like, hey, do you want some money at 12%? We'll loan you 100%. I said,
what does that conversation look like with that institutional company calling like, hey, do you need some debt? Here's the terms I can get you. Like, we are aggressive right now because they think about it differently than the mom and pop lender or whatever else.
For sure. I simply say, listen, I'm always open to terms. You're a fool if you just close the door. I like having a conversation, or you talk about the news. Hey, enlighten me. Let me know how great you are. What can you do for me here? If I give you, 65% loan to value, and I give you 10 homes at $4 million, what would you give me? I like to reverse engineer.
Yeah.
You tell me, you're cold calling me. You tell me how great are you? I'm going to throw you the football. Let me see you run and catch it. Tell me why I should, play football with you or basketball, and so you don't break your ankle. But,
Do you catch them off guard a lot doing that?
No, I'm just going to ask the question. Like, let's not waste time. This isn't a dress rehearsal. I'm going to ask you a factual company if you give me factual data. Listen, if someone wants to beat my local bank rates, call me, of course. Down. Like, what are you, I don't care if you're a one-off wholesaler, it's your first deal. I hope you call me. I'm going to give you the time of day. You're in control of a good asset and you want to sell me a deal, it's the same thing. I'm all ears. Call me. I get calls all the time and I'll spend the time talking to you. So sell me on it. The point is, if you're not going to be below 6%, and I say, if you can give me some below 6, they're like, 6? I say, yeah, I can get 6. And they say, no chance. I said, well, I appreciate the call and I wish you the best of luck. I'm not your guy, So the point is, at transition, when I had the ability to liquidate a bunch of single family homes that I had investment capital on from OPM, other people's money, there's an opportunity where a liquidity event, then all of a sudden I have my own liquidity. Then I can go deploy that in my own single family homes, free and clear. Then I go to the bank and collateralize those. That's when you become free. You're independent, right? And then it's just a numbers game of keep turning those and deploying and growing. And
have you ever thought about just liquidating everything and just cashing out and then just having an exit event?
That's a conversation.
Because when you get to that level,
yeah,
right, I think it's sizable enough to where you could exit.
100%.
And you could then just be like, dude, I'm my own bank now. I'm like my own family
So
office.
Blackstone, I had a conversation with them a few years back, and we had real numbers on the table. And at the end of the day, I've been a captain of my own domain for so many. I've been steering my own boat for a long time. When you get in that situation, their whole thing was, I was like, well, if I sell for this number, I'm going to have a huge taxation, right? Because there'd be a taxable consequence. I could 1031 exchange it, but then it's like,
now you're still stuck in it.
Stuck. Then I got to go. I need to stabilize new assets again. I'm thinking about redeployment, or I just go into bonds, right? I have these conversations all the time. Boy, it'd be really nice, but it's just not in my blood. Like before my dad passed away, I said to him, and we were talking about it, I said, Dad, I have this opportunity. I said, I can go big or go home. And he goes, you know how we do it. We go big or go home. And that's exactly, look who's calling. Well, let me get rid of this. I should answer it.
You should answer
It's so
it.
funny. No, right.
It'll be good for us.
It would be so funny. It's a good deal, too.
I bet you it is.
So you can either go big or go home, but you should have those conversations, right? But then it's always about, I like my cash flow today. I say to myself, if I sell and I go into a cash position, where do you deploy the money? That's immediate bank, in terms of investment strategy. What happens to that stagnation of money? What's my yield at 4% on a bond after taxes? Well, it doesn't make sense. I'm happy to continue to hold. Or Blackstone says, well, we could put you in our own stock and then we avoid taxation and this and that. But it's like, no, but now I'm relinquishing everything I built and taking a back seat in the boat. But I'm not a backseat passenger. I'm the captain. We're the captain of our domain. That's the beauty of entrepreneurship. Why would I do that? You know what I'm saying? So I'm still in growth mode. I'm still enjoying the business and doing it. If there's a point where I'm just not enjoying it, or I'm not happy doing deals, which I can't foresee, then I'll revisit that
We
conversation.
talked about this. You love the thrill, the chase of the deal.
Love
chase.
the deal.
So
Yeah.
why would you give that up? That's what keeps you alive. That gives you life.
Correct. This is the best business in the world. And I always say, and you guys do all your talks, and I've been on stages, and I say, show me a business. Tell me a business out there that's legal, that's going to give you, an 8 to 10% return, where you feel good about doing it, and you have control, and you're not losing sleep at night. What business is that? Well, we'll wait. Please put in the comments, or people can respond to your stuff. Let us know an alternative business that gives you an 8 to 10% return, that you have a lot of control, that's tangible, that's legal, that you feel good about.
And unlevered, bro. I like how unlevered you are.
Right.
Like, for me, I don't like a ton of debt.
There you go.
And for
But at
you,
your age, I would still encourage you to have strategic
I know
debt.
I need to still take on debt, but to be doing what you're doing with minimal debt and like less risk, right? Because Warren Buffett talks about ladies, liquor, and leverage. Right? Ladies are already a dangerous one. Liquor's already a dangerous one. Leverage will take you out though, because like 2008, a lot of people got taken out by bad debt.
Yeah.
I don't know if that's happened again since, but that'd be one thing I'd always be cognizant of.
Multifamily.
So
That's
like
happening
that, like we were
multifamily.
talking about earlier.
So I want to get into debt. Before we do that, I want to ask, why single family? So that's one of the biggest things that I'm constantly thinking about, because I've been all single family,
Yeah.
right? And I want to get into multifamily.
Okay.
And so why have you only been single family?
So again, we talk about just being an expert at one thing. I've been enticed and pushed by so many different external people to, you're an idiot. You're only single family. You need to own multifamily. You can get better leverage. The returns are exponential. Well, coincidentally, we look at today. We're sitting here in 2025, October 6th. Was that 7th? What's today's date?
7th.
7th, October 7th. Well, look what's happened in multifamily. All these people.
It's a fucking
you're not
bloodbath.
getting long-term debt on it. It's really hard to get some long-term debt. Single family, you can get long-term debt.
That's a big one for me.
It's a big one. So I like having projection and stability and contingency plans.
Yeah.
With single family, you can get 30-year beautiful long-term mortgages where you're not worried about a 5-year horizon or timing some market.
That
It's
shit
not
is so scary
that's
to me.
Scary,
It's a trip.
right? It's a trip. So here we can get stabilized, very predictable, projected, returns. And what I like about single family is the fragmentation of the market. The fact that it's not sexy until now, more Wall Street firms or REITs or the Blackstones have come in because they realized, which I realized for a long time, that it's such an easy game. It's not so complicated. I think you see a lot more appreciation, in my opinion, if you look at the returns in single family
time.
versus multifamily over time. There's just so much value there. And again, the fragmentation where every deal, you're not competing with Wall Street on these one-off deals. We're independent people. We're better than them. We're creating these strategic relationships with real sellers. You're not dealing with institutions and these difficult companies that are in control of the multifamily. You're dealing with humans, with their largest possession, and we're creating, beneficial opportunities for them and for ourselves on these deals.
Why do you think Open Door fucked up so bad? I have my own thoughts on it of why I don't think they could be successful. Now with AI, I think it could work. But why do you think they fucked up so bad? Because that's like the institutional who tried to do it. They tried to do it.
Yeah, they weren't holding. So Open Door number one, they were just trying to flip and get in and out. And I think a lot of things, I believe in spending the money to make the money, and I don't believe in Band-Aids in what I do. What I say that is they're a lipstick company, in my opinion.
Yeah.
You don't see Open Door taking these homes. They're not buying these hoarder houses. They're buying stuff and they want to do minimal work and make a quick profit, and they have that booger sugar mentality that we spoke about. It's a delayed gratification game. Spend the money to make the money. There's no lipstick. The lipstick on a pig is what I think that they do. What we do is we come in and we do full surgery. We're spending money. I'm putting a lot of money in these homes to create a really viable, tangible, beautiful, emotional connected product that's desirable to all these families. Open Door, in my opinion, when you look at their stuff,
Lipstick.
it's virtual reality, it's these cheap floors, it's laminate. I don't have a laminate in any of my houses. I use porcelain tile, I use quartz counters, I use beautiful stainless steel appliances, nice fixtures. I care and I'm passionate about my homes. They just care about returns. If you're just chasing a return, you're not going to be successful in real estate. You got to care about the product. You got to be branded. You got to be desirable. And I think that's maybe their shortcut of is they're just putting a bunch of Band-Aids on and it breaks and they realized, oh, we need really stitches. We do stitches in our homes. And so that's a long-term solution. You're not going to put a Band-Aid on it 5 times.
Are you a Bob Proctor guy? Like a Tony Robbins guy or anything? Like your energy-ness reminds me of Bob Proctor, Tony Robbins, to where you are very cognizant of it. And my first mentor who I worked for was very much that way.
I've never been to, interesting fact, I've never been to a seminar. I've never paid for a mentorship. I just learned stuff by being on the streets, asking questions, doing the work. So I don't know. I mean, I know who Tony Robbins is. I did a podcast with Dean Graziosi recently.
That's it.
Very intelligent guy, great energy and great advice. But you can have all the advice in the world, but it's all about execution and implementation. Yeah. So I probably read 4 books in my life. I'm not into all this educational stuff, respectfully. I'm sure there's a lot of great stuff out there. I'm interested in sitting down with great guys that are doing great shit and having impactful, great conversations. That energizes me.
It's more about the woo-woo energy. You are so positive energy in everything that you do. And I personally think it permeates through everything that you do. I think because you go into it with so much intention on those houses, that you set the tone for that house to perform well.
There you go.
Yeah, have you always had this positive mindset, energy that you've brought to it? Or is it something you developed just that you kind of had from a result of having success? Or were you even in the early days just like this?
I really don't know. I think I've, maybe evolved into this. I think I like to use the word intentionality, which is a great point. What Open Door is not they're intentional about trying to make quick money, but you come in with intentionality of having functionality, emotional appeal, serving people, being cognizant of all the different factors with this intentionality is very important in this business. But it's probably something that I learned over time, right? We probably all experimented maybe early on where it's hey, maybe I had the Open Door mentality with a couple flips in the past and you realize this isn't the way to go. So I would say it's probably a learned skill through trial and error and realizing this isn't the way.
Just do it.
Just do it right the first time, spend the money to make the money, period, the end. Just do it right.
Are you buying stuff tenant occupied? Like what is, I know you're not in California, so you're not as concerned about it.
I buy stuff where there's existing tenants, of course, but it all comes down to what's the equity and what's the current yield. But a lot of people will pass on a deal, this is very interesting, where it's like, tenant, I bought one recently, it was, bought it for $300,000, the tenant was paying $1,800. That doesn't cash flow, but real market rent is probably $2,800, right? $2,700. But the house is worth $400. So wouldn't you just wait out the lease and then you give them an opportunity to bump them a little bit, not to full market, to stay and get closer to the appropriate yield, or give them an opportunity to go find another place, or buy them out of the lease and put someone else in? Some people say, well, at $1,800 it doesn't cash flow. Yeah, but the $100,000 equity, when you recapture that upon vacancy, now you're talking. So I think so many people are hyper fixated on the micro aspect of the deal versus the macro. And I think it's really important to step back and say, what's the yield once this is stabilized with the current market rate? And or even if you held that for a year at $1,800, when you recapture the equity and you sell it after a year and you get a long-term capital gain, your yield's exponential. It's probably 30%, 35%. So many people say, oh, at $1,800 I can't buy that, it doesn't cash flow. Yeah, but it does with $100,000 in equity. You know, it's crazy to me. So the answer is yes. I'll buy. I don't care I care what the market rent is, but I also am not going to let that dissuade me from an opportunity with tremendous equity and great upside potential to push the rents.
So do you not care about any hair on a deal? Like, bro, the numbers make sense. We'll fucking figure it out. It doesn't matter.
It's not so passive like that. It's like I look at everything. I care about equity, number one, in the deal.
Yeah, but like
opportunity,
price.
price.
You know that it makes sense. Like, okay, I got a shitty ass tenant in here. I got to evict them. I don't know what your guys' eviction laws are.
Yeah, it's pretty easy.
Is it pretty easy?
Of course. I mean, I'm going to buy a deal if I know. Oh, a lot of times owners or landlords are disgruntled, and the reason for selling is because they've got a terrible tenant, and so they say, hey, you take it. I'm giving you a lower price because I can't deal with this tenant. Well, of course, anytime you're buying a distressed asset and they have a high utility sell, we're solving the problem. I'll take on the problem of this problematic tenant, no problem. And that's why you're getting a discount. So exactly. I'm paying, but I'm also solving the problem. Yeah.
We talked about pre-pod about leverage versus.
You want more, Zach?
I'm good, but you help yourself. Yeah.
So we talked about before the pod about having leverage on your rentals or having them free and clear. Mm-hmm. You happen to have a large amount free and clear. Mm-hmm. Have you ever thought about or wanted to leverage up and go buy more? Or have you just wanted to continue to grow it as liquid as possible?
No, of course I think about it. I mean, whenever you need capital and you're burning through your cash flow or the liquidity event of selling some of the single family or dollar cost averaging in there, you just recognize and want to be proactive in terms of pledging more. I never want to be over-levered is, a term I would be averse to, but I always want to be under-levered and strategic, especially at this space that I'm in right now. You know, it's like I built something pretty substantial. I don't want to jeopardize it, right, by getting greedy or getting over-levered, but I believe strongly in strategic leverage, absolutely. So I will continue to lever up incrementally the portfolio to buy great assets that increase my, my net worth, and having good assets that align well synergistically with my other portfolio.
When did you start thinking that way? Like, I was listening to a guy today on a podcast when I was on the airplane, and it was about, he's a poker player. He won like 6 world poker tours or whatever. And he was like, it makes no sense for me to just sacrifice my entire chips to go make 25 grand. Like $6 million for 25 grand doesn't make sense. Mm-hmm. He was like, I've already made it. Mm-hmm. So at what point you're like, okay, I made it. Now I need to start playing a little bit more defense.
Defensive, yeah.
Yeah, instead of being as aggressive as I was.
I think
Thank you, Chris.
Yeah, I'm always incrementally aggressive, but I'm definitely in defensive mode too. Like, I'm good. Like, I don't need to work anymore, but I enjoy what I do. I love the game. It's not about chasing the money per se. Having a lot of unencumbered homes makes me comfortable. So hypothetically, if everything shit hit the fan, I know I have a bunch of unencumbered homes. I'm good. That's a defensive play. If I put leverage on everything, maybe I wouldn't sleep as well
anymore.
at night.
I feel like you wouldn't be as good anymore.
Right. So I think it's just a combination of balancing those two, right? You got to play offense, but you also got to play defense, just like in sports, right? You can't just be all offense and no defense.
Yeah.
It's a similar, mentality.
Have you had any key partnerships throughout your journey?
Absolutely. I had many. A couple would be, my dad and my mom. They invested in me early, after I was established. They didn't put up a lot of money up front because I didn't know what I was doing. But after I proved myself, it was like I asked them because I wanted to give back to them because I was confident what I was doing, gave them preferred returns or an equitable split. So that was really nice as a kid.
That has to feel good.
To reciprocate and give them love. When you're so confident in what you're doing, and of course you make them good money, and it feels really good. You take them out for a nice dinner and write them a check. I got to tell you, if you haven't done that as an entrepreneur, it's one of the greatest feelings in the world to give love and give back to your family. I mean, we are so blessed that they've protected and helped me in so many different ways and paid for my education and took great care of me as a kid. I'm very blessed, and so to give back in any amount of way is one of the greatest gratifying experiences. In addition, I work with an oil company out of Michigan that I was introduced to. Amazing family, and didn't know who they were, and it was serendipitous. That's the whole point of ABC, always be closing, always be talking to people, doing what you're doing, getting yourself out there. Early in the career, it's hard to raise capital, right? Because you don't have a huge track record, you don't know a lot of people. And so I just had a basic conversation with an agent, and I had some notes in my portfolio, and I wanted to buy more single family. They were performing at 12.5%. The problem with notes is you're stuck because you're just getting the yield, but you can't collateralize those with the bank.
Do you like notes? I don't like notes. I have some notes and I don't like them.
I like good notes, but I prefer to own active real estate because we're active investors. If I was retired, I would love 12.5% notes. Are you kidding me? In a first position at 80% LTV? Sign me up for the 12.5%. But at your age, I think that you could turn that money multiple times. The domino effect of that active capital will give you a greater yield than your notes. And plus, you're not getting depreciation on the notes.
Exactly.
You're not getting appreciation on the notes. So at a certain point, you could arbitrage them and sell them at 10 and guarantee them at 12.5 and take some money off the table and still clip 2.5% by guaranteeing them. Would be a good strategy for you. So it's an option. But so I had this candid conversation with the agent, and I said, I'd like to sell these notes. And she introduced me to a high net worth family, and the guy flew out to meet me. Great story. I picked him up in my Ford Explorer Sport, my shorts, my shirt, and my car was dirty. It's always so important just to be yourself, right? If you don't wear suits and all of a sudden one day you're walking around in a suit and all spiffy, that's just not you, right? It's like we're here, you could tell you're yourself, I'm myself, I'm the same guy in and out. Be authentically real with who you are, because any high net worth person or anyone is gonna be intuitive into your energy and who you are. Picked him up, drove him around, showed him the notes. The guy was enamored and said, I'll buy all your notes on one condition. Sure, what's that? He goes, as long as I can invest with you in the future. I don't know anything about this guy. I don't know his net worth. I said, yeah, that seems reasonable. He goes, all right, my attorney will be in touch with your attorney. I'm like, my attorney? Okay, right? I said, okay. $25,000 later in attorney's fees, getting my DNA, my sperm samples, you name it. The guy want to make sure I'm not some fraud, which is smart business. We come to deals.
He really did a background test on you.
Absolutely. He did a full background, like criminal investigation, everything. The attorney did their due diligence, which is really smart. I'd recommend it. And it's good. I have nothing. Please do your research. You're investing a lot of monies. It's really smart.
I think I heard Tony Robbins actually tell a story about that.
Like
how
at this
anybody
point
he
in
does
time,
business with now.
I'm doing a full-fledged.
Absolutely, you should. You should look them in the eye. You should go meet them, shake their hand, see how they are, see their friends. Like, do your own due diligence, get your own intuition, 100%. So he does that. I'm like, I hope the guy invests. I'm out 25 G's, but great experience. He invests, he sends the money, I sell the notes, like $1 million in notes. It gave me liquidity. And he says, all right, let's start with the $250,000, investing in new deals. I'm like, well, I'll let you know when I have opportunities. So I call him a couple days later. We buy a couple deals, and the market was hot. This is like 2012. And I sell them. We make like $100,000 in a month. He's like, all right, go to 500, go to $1 million. Shit, go buy whatever you want. I'm like, where are you getting this money? And I do a little research on this guy, and I'm like, oh, he's got money, oil company, great guy. So the point is, you never know who you're going to refer to or attract.
Exactly.
And so you got to manifest, you got to project, you got to ask for it. I didn't know this guy. He wasn't family, he wasn't friends. I didn't even know the agent before. So what a beautiful relationship of just. That was a huge part of my growth, because now I have one family that says, go out and buy whatever you want.
Do whatever you want
and
to
we're
do.
going to fund it. And I made them tens of millions of dollars. But guess what? They made me that too, because without their capital, that would have been impossible.
But that guy is gonna invest in you every time, because it's like I know this person, I know this energy. Like, I'm in.
Yeah.
Essentially.
So, I mean, but of course, like at first he started with, hey, I'm going to buy the notes, and those notes were great. And then we created a lot of notes together, and we flipped a lot of houses together. So at a certain point, he's playing with casino money. There's no risk to him because all the money that was reinvested, we were flipping houses. Then we held some houses together too, and I've been very grateful for that relationship. That's been incredible.
I had a very similar first private lender story as well. So I sent out my letters for direct mail.
Yeah.
And guy calls me back, says, hey, I don't want to sell my house, but I've got $1 million in the bank. What could you do for me?
Right.
I said, I could give you 10% interest return. He said, when can we meet?
Right.
And I had not flipped a house yet. I was just wholesaling, and I had just got done wholesaling a couple houses to my now business partner. We weren't partners yet. And I'm like, hey, Lewis, this guy wants to lend me money. Can we go to one of your flips? He's like, sure. So we go to his flip. The guy says, I call him back. He says, yeah, is it all right if I bring my friend too? He's got more money than me. I was like, yes, please.
Yeah.
So they both show up. My partner Lewis is showing them around, showing what we did. And they go, okay, you guys know what you're doing. Tell us when you need the money. Like,
Wow.
holy smokes.
Wow.
So a week later, we get our first deal. We do the first deal with them. And it ends up turning out to be, this is when I was early in my career and I was only flipping. And it turns out he didn't just have $1 million, but he had, $3-5 million. And he opened up $3 million to us, and we were just churning and burning through that. And his buddy had even more money. And just on that one relationship alone, have flipped hundreds of houses just through that one guy. And what a difference maker,
But you treat someone right, you take immediate action, you didn't, hesitate. You're like, today I'm going to meet you, right? That's the beauty. It wasn't like, well, I'll let you know. When the opportunity's hot, it's hot. You got to capitalize. Whenever you need money, it's not available. When you don't need money, it's typically available, is the cardinal rule of thumb. And the money always follows the opportunity. So if you have a great opportunity, you know how to pitch it, money will always follow. That's the facts. Yeah. You can let them out if you want.
That family you're working with, is it like a family office? Like I was thinking about going to a big family office event next week, essentially, just because I know I'll need the money.
Right.
So I might as well go build these relationships.
You should get ahead of it today, right?
Right, get ahead of it today,
100%.
you'll need the money.
So someone says, Stratton, when you have an opportunity, I've watched your stuff, I love what you're doing, I like how conservative you are. When you need it, I'm there. I think that's an amazing approach to be proactive on that capital raising for sure. Yeah, this is Onyx making his cameo. He's getting jealous. Yeah.
I want to talk to you about branding. So I think branding is important for anything, and how you treat people is part of your brand as well.
For sure.
And we can tell that's a big part of who you are, and you're a super genuine, real dude. How have you taken Zach Ventures and Zacquisition, Trash to Cash? How have you made that part of your brand, and what has that done for you?
Just being consistent, right? I think a lot of people overthink so many different things. It's been Zach Ventures from the start. If you pull up my LLC and
it's
the corporation,
it's on your LinkedIn, bro. Because I looked you up on LinkedIn.
Yeah, so
I was
it's been
like,
the same
can I find your brand?
Sure.
Zach Ventures.
And so you don't need all this pizzazz. You need execution. You could be whatever you want. It has nothing to do with the name. Zach Ventures doesn't mean anything to him, but Trash to Cash, very simple. A buddy mentioned it one day, and I was like, that's genius. I'm going to keep saying it. And then my aunt says, Zach, you need this acquisition. Shout out to my Aunt Mame. I'm like, that's brilliant. So then I just being consistent. And I think that I use this thing when you talk about branding and marketing. Out of sight, out of mind, right? So what do? You guys do podcasts to be top of mind, to project real estate and incorporate other people that are actually doing stuff. Same thing with my mentality. I waste no time being out there and just being real. I don't have an editor. I'm not good with social media. Nobody cares. They want to connect to you. So I turn on my phone and say, welcome to the newest acquisition. Here's the property. Not to brag about it, to be top of mind mentality. So it's like, oh, Zach's actively buying. I'm going to call him. Zach, it looks like you just bought one in that neighborhood. Here's another one. Or reaching out to agents. So it's just important to whatever it is. It could be the dumbest slogan ever or the dumbest name of the company. Continue to put it out there. Top of mind mentality, out of sight, out of mind. I don't come up with the 20 different slogans. Keep it simple, stupid, and put it out there all the time. And then people literally call me at the gym. I'm lifting like, hey, Zacquisition. Hey, Trash to Cash. And now you know the shit works because people are like reciting stuff. I'm walking in Costco. Hey, Trash to Cash. I'm like, oh, okay, I'm a celebrity in South Phoenix. Great, whatever, no cool. NFL player, but it's nice when you get that recognition and branding because you know what you're doing works. But I think so many people are tentative or they're nervous about posting something or doing something, just turn on your camera, film, and post and ghost. Like, none of my stuff's edited. I don't even know how to edit. I just post it. Have a nice day. Hashtag Zacquisition, newest acquisition, rental, Phoenix. Bye. That's it. So I think just take action, put it out there. Don't worry about what people think, and just be consistent. Get that top of mind mentality.
I think the biggest brand hack is doing what you say you're going to do.
Sure.
Right? Because like Armando.
Oh. You don't like Dean? You want to come up here? You want to come up? Come here. Come up. There you go.
Wants
Come
to
up.
cuddle.
All right, sit down. All right, sit down. You got some questions? Sit down. Good boy, sit down. Okay, bye.
Out.
Okay.
So like Armando, he at a point in time he had 126 active projects out in like Central California, like huge. And he didn't pay the most, but I know if I send a deal to Armando, he's like, I'll do it at this price. I don't have to worry about anything else ever again. I feel like that's you. You're like
100%. I don't get emotional over it. That's the beauty of like, someone sends me a deal. If it's a great deal, I'm happy to pay the price. If I don't like the deal, here's my offer. There's no emotion. But they know when they call me, there's no assignment. It's done. I've never missed a closing, ever. Never been a day late. Never. So what's the value of being a guarantee to a wholesaler? It's a lot.
It's a lot, bro.
Because if someone else you're selling to some third party that doesn't have a track record and you're worried about execution, that's a problem. It's your name on there, and then you got to, backpedal with the seller saying, "I'm so sorry, I didn't close something." No, ma'am or sir, this deal is going to close for sure. We need the keys on this date. It's closing. Like there's a price for a guarantee. It's so important to be that guarantee. People know when they sell me the deal, I sign that assignment. Done. I've never defaulted. I've never retraded. I never will and never have.
And our team doesn't have to worry about it again.
Correct. There's no babysitting. Where's the earnest money? Where's the hard money lender? There's none of that BS. I'm wiring the cash. The deal's done. Have a nice day. It's a beauty. So when you can get into that position, you're leveraging these opportunities to the best level.
What does your team look like now? Like I know you said, you talked about your leasing agent earlier and you have your handyman. What does it look like?
It's me. It's my handyman, Daniel. I got 2 designers I work with, one for the high-end, spec stuff, and another one for all my other properties. I've got my assistant, Vicky. I've got a tax advisor. And then I have a lot of independent guys that I can reach out to, like roofers, granite fabricators, plumbers, HVAC, guys. But that's really it. I mean, you're sitting in my office, right? People think you need all this big commercial space. You need all these billboards. I mean, that's the beauty of real estate. You could run it right from here, right from your phone. You could run it from another country. I don't recommend that. I recommend, doing deals in your backyard because I think a lot of people are BSers and you want to see these assets and the tangibility firsthand. But I keep it so thin. And banks like that too, by the way, when they say, hey, what are your sunk costs? What's your overhead? I'm like, what overhead? It's a beautiful thing.
Yeah, they're okay, we're good.
Right.
What is, when did you find a good tax advisor? Because now taxes are the biggest expense, especially for where you're at. Mm-hmm. When you're like, fuck, I need to find a good guy. How many guys did you go through? Like, what did that look like?
I've had the same team the entire time. I used a firm out of Michigan. They've done me well, as far as I know. But in fact, they are retiring. So it's funny because I'll let you know next year when I'm on the search for a good new firm. So they're retiring. Probably overpaid them. So that's my problem right now. And we'll see where I land. I don't know. I think that's going to be difficult to replace them.
Okay.
But I'm sure, look, there's amazing people everywhere. So if someone has a great tax consultant specific to real estate, reach out. Do you guys have good tax people that you love?
I wouldn't say I love them, bro.
I think they're good. It's just a matter of knowing if they're going to help me get to that next level, level of consulting and advising.
Sure.
You know?
I mean, there's only it's all just a matter of the law, right? Are they maximizing what they can do? Are you strategic in your write-offs? Are you guys doing accelerated depreciation and strategic, depreciation moves?
So I was going to ask you about that.
Yeah.
So talking about taxes, talking about wealth building, rental portfolio, are you just doing your typical straight line depreciation? Are you doing any cost segregation? Are you doing any advanced strategies at all?
I am not. Again, because look, there's recapture. People think you're saving all this money today, but
there's
playing the long
recapture.
game, you're
Recapture
recapturing.
is the devil.
Taxes are always going to go up. So yes, you're saving money today on paper, But what about tomorrow when you sell that? Now you're really stuck because you're going to have a huge amount of debt, or you're 1031 exchanging for the rest of your life and restricted. People can argue it all you want, but I have enough assets by using straight line depreciation. I don't do any accelerator or anything else, that it works. It works for me.
Did you ever, and you're like, I'm not fucking doing this again? Because we buy storage facilities and I want that accelerated depreciation. So like, did you ever do it and you're like, I don't like this position that I'm in when I come to sell this thing?
I've never done that.
Okay.
I've never done that. I've never done any studies. I've never done any accelerated depreciation. People brag about it all the time, but again, if it's not broke, don't fix it. I may not be maximizing everything for myself, candidly. I don't think I'm, the best tax strategist, or maybe we missed something. I think the team that I have is pretty smart, but it seems to be working pretty well.
How often do you actually work? I know you're a deal guy, but you can work whenever the fuck you want to work.
You say that, but at the end of the day, because, it's mine and I care, I mean, I'm technically working 24/7. Like, I'm always on.
Right now is on. Right now
well,
is still
my
on.
phone is off because I turned it off, which is, stressful for me because I like having access. But other than that, it's like, I get calls all the time. I get calls 3 a.m, the house is on fire, whatever. I mean, it's part of the job, right? But it's not really a job. It's the career that you chose. And I wouldn't trade it. Pressure is a privilege. And so if you're not getting the pressure, you're not getting the calls, you don't have a business. If it was easy and there was no problems to put out and no fires, there's no business. So it's like, how do you handle that? And it's just, you got to have that perspective and mindset to embrace these opportunities. We're blessed to have problems to put out. Otherwise, what are you doing? You're not doing anything with your life. You're stagnant.
So for you to go from when you started and doing some joint ventures to get deals going, equity splits with people, you said you then built your business and scaled it by doing marketing, $65,000, $70,000 on the TV and the billboards and all the different marketing. What were some of those key things along the way that really helped you see some big leaps and bounds? Like, can you think back, like, was it a team that you built? Are you just a freaking grinder and you were just slaying deals and you're just a deal slayer and you found the right people to bring you deals and kept those relationships? Like, what were the key things along the way that helped you get just such great results?
Well, the marketing was great. We brought in a marketing team and we brought in that franchise. It was similar to We Buy Ugly Houses, right? You heard of them?
Okay. Yeah.
So we competed with them back in the day. So we had 1-800-NO-AGENT, and I remember going out, and I think that accelerated, right? And strategic marketing works. Back then, no one was using these, direct pay-per-clicks. There was no Instagrams. No one was really Google searching back then. Candidly, I was doing deals out of the newspaper, right, in 2002 and 3 and 4. So people listened to the radio, they did the billboards and TV, and we did all of those. And you looked at, hey, what are we spending? What are we bringing in? It's pretty simple math. If you're getting a 3x, 4x, 5x,
keep going.
So it worked. But the key is the execution too. So I love those income. I mean, I was a workhorse. It was me, my cousin, my uncle. We were all hammering in the office, taking these calls, flying out to the properties, pre-qualifying on the phone. Well, if we can get you this today, are you ready to sign? I'll be there in 20 minutes, and I show up, and then We Buy Ugly Houses, cars outside, and I knew all those guys. So it's funny to see those guys even today. It's like, you motherfucker, or whatever. But the beauty was those guys were wholesalers. And the key component of what we did is we digested everything. So when I went to the seller and said, here's $20,000 non-refundable, no contingencies, no assignment clause, good luck on telling that to these other people that they didn't have the capital or they weren't going to digest it. They can't compete. So they saw me walking in and said, oh, shit. I said, I'll wire all the funds today. Ask the other companies if they'll do that. And then it's like, oh, we're not doing that. It was easy. So you're a kid in a candy store at that point. But no, you just need a system and work that system. And that was great, and it worked for a long time. But going back to that too, I think everything in this business is so time sensitive. What I realized coming from Detroit, and you guys are California guys, people in Arizona and other states, when I came out here originally, they didn't move as quickly as that New York, Detroit hustle.
That East Coast is fucking fast and aggressive,
Fast
bro.
and aggressive.
They are fast and aggressive.
So when you take that energy and that responsiveness, nothing like baffles me more than calling agents and inquiring about houses and it rings 10 times, goes to voicemail. You're an agent. This is your sole job, to answer calls and be responsive. And then they call you back 3 days later and you're like, why are you even a listing agent? What is going on? Answer your phone. I'm a huge person of you FaceTime me, you call me, I'm going to answer the phone. Or you text me, I'm going to respond right away. Or I'm going to FaceTime you. Careful, he might be eating something back there. But you might have to go outside. But be responsive. So when those leads came in and you talk about aggressive, we hammer. It was like, we're picking it up with their call, 1-800-NO-AGENT. This is Zach, how can I help you? It's not going to some lead service and then 20 minutes later or an hour or the next day we're responding. We were on that like flies on shit. It was like, this is the money. That's ringing directly to our phones. And so, again, you got to be responsive in this business. Time kills all deals. We've all heard of that.
Oh, yeah.
So
The number one rule in real estate, I think.
exactly. So quick, expedient, response, execution, and be ready to close. And by being the market makers and the first mover, responders, we know the numbers so well that I don't need to go comp anything. We are the comps.
Yeah.
When you're so proficient and so knowledgeable of a certain environment, you already know the numbers. Someone calls me on a deal, it's not like, oh, let me go comp and I'll get back to you. Oh, I just did one down the street. I know the numbers. Let's go.
Did you get that aggressiveness from like being on Wall Street or no?
I think
Or
it's
is
in the
it-
blood. I think it's
it's
just
just
like
in the
just
blood?
understanding business, right? It's common business.
Because I have to be like so. I work until like 11. I know Dean works until like 12 or 1. To where I can text Dean at like
In the afternoon? Nah, just kidding.
I can text people at like 11 o'clock at night, but people aren't like going. I know with Dean, if I have something, I text him, I'm gonna get a response like immediately.
Yeah.
And if it was like to do a deal or do something, he'd be like, yeah, let's go.
Do you guys ever joint venture on deals too?
Yeah.
So
Nice.
we definitely have, yeah.
Oh, that's awesome. Now, don't you think, so for me, being a solopreneur, by the way, every once in a while, I'll like maybe give equity to a wholesaler or put them in a deal as a thank you for some opportunities. And I always find, this is really interesting, that doing that deals with them, it's not about the money, it's about the camaraderie. And so when you guys do a deal and you celebrate, you guys go out for a dinner after if you make a bunch of money and celebrate that deal, or
Doing
no?
business with Dean is more about doing business with my boy than anything.
There you go. But
Like-
isn't it enjoyable, like going back, giving back to the parents, or doing something, reciprocating for some opportunity, or working together? I just find that that's one thing that I do miss, candidly and vulnerably, as a solopreneur. Is like, it's nice. First of all, you get diversification in the risk, but you also can celebrate that together. Once a wire hits your account and you're a solo guy, it's like, okay, so your account goes up, down, whatever. There's no real impact. When you both get that wire and you call each other, yo, get the 50K, get the 50K, yeah. Let's go get a T-bone, or let's go get a cocktail or a spritzer or whatever. Isn't that exciting for you?
The relationship aspect is cool.
Got it.
To be able to do something with someone else.
Yeah.
Like you said, once the money hits the account, that's not the most exciting part for me.
Right.
Even though it's nice, don't
Yes.
get me wrong.
Yeah.
The exciting part usually for me is the deal, getting the deal,
Right.
right? You talk about
Yeah.
the chase of the deal.
Yeah.
That part is where I get the most energized and excited. And if you do that with someone else, there's another energy exchange there too.
Yeah. There you go.
And I'd say like as an athlete, like I miss the locker room. And like me and Dean do something, I'll get a phone call. Yo, let's go! And it may be on some random thing that we close, or he'll call me and have me like, hey, I told you I'm a fucking closer. Strat, I told you I'm him.
Right.
Strat, I told you
I
I'm
love
him.
that. Yeah.
And it'll be something like that, to
Yeah.
where like that's the aspect that I like the camaraderie of it. Because like, as I'm a solopreneur and everything else, and it is like, okay, like it closed, fuck, head down, grindstone, keep going. But when you have someone who you enjoy doing business with, it is a lot different. Because like I've had so many different partnerships that didn't work out, partnerships that worked out. And if you do it with someone like you enjoy doing business with, it is so fun. Would be the number one thing I would say.
Right. Yeah.
Have you made any big mistakes along the way?
Ooh.
Yes, of course, everyone makes mistakes. A couple. So one was I invested a lot of money that I made early on in my career into a company that I did business with, and they did a lot of seller financing out in the Midwest. And I was thinking, okay, I did this, I'm making this passive money on the flips. It was before my buy and hold, and I'm like, well, I got to redeploy this money. And so I was getting a 10% yield on notes in the Midwest, and the company they were big players and big net worths and knew them very well. And that mailbox money stopped going. It was close to $1 million and overnight. And so the big mistake was I knew them well. We did a lot of business together. I trusted them. But what didn't I do? I didn't get anything written in regards to, of course, I have my wires out and I was getting, K1s and 1099s on the interest, but there wasn't a formalized agreement to secure that
Yeah.
capital investment. How dumb is that? I mean, whether you're investing $10 or $1 million or $100,000, it doesn't matter. Statute of frauds. Get whatever the agreement is or what you're investing in and protocols and contingency plans in writing. So those of you that are investing in somebody, a friend or family, I don't care who it is, you got to plan for the worst case contingency scenario. Get it in writing. What's the protocol if somebody is incapacitated or dies or fraud, so that it's clearly written out what transpires. That money's gone and I lost it. And so it's a blessing and a curse, right? So as the optimist, I said, God, it really screwed me up for a while because that's a lot of money. But then what I learned was, gosh, when I'm moving forward to raise money and having been a victim of what I call fraud, when I'm out there raising money to people invest in me, I can now humbly say and transparently and vulnerably, hey, I lost money sitting in your shoes. Here's how I'm going to protect your money by me being the captain of the domain and ensure that that would never happen to you. And so it became a blessing where people understood that I was sitting there and I could relate to you and put clauses and contingencies in place to ensure that it's going to be successful and, you know, ensure that your money's fully protected in writing and recorded with deeds of trust and against properties and, you know, where it's being held and all of it. So it became a blessing, but at the time it was a curse. So that was terrible. Well, I mean, there's so many lessons. Again,
In the last 2 years, what's the biggest one? Like, do you still make mistakes now or no? Because like you are, I would say, in the top 1% of the world as a human. Like just statistically.
Up there.
Like up there. So in the last 2 years, what is the biggest mistake you've made? And like, okay, how did I fuck it up? And then how did I get past that fuck up?
What I'm going to say is probably going to surprise you. I wouldn't say in business. I think I'm pretty good at the business side. I think where I really fucked up is, you know, chasing money for such a long time and being so married to business, where you guys are, you've been in a long-term relationship. You're in a long-term relationship, and you have kids too, right?
Yeah.
Okay, so have I missed my opportunity because I'm so, you know, vested in chasing deals and being selfish and chasing money and doing deals? Probably. And so did I miss out on potentially great long-term relationships that's more important than business, in my opinion? Probably yes. And so I think that money's not everything, right? And deals aren't everything. I think it's important to be diversified and well-rounded and balanced. And I think I've been imbalanced in terms of my life. It's about the Zach show and the dogs and myself and deals and, well, where's the partner? Where's the companionship? What's the legacy? Where's my kids? You know, so I would say you can miss a few opportunities. You can miss a few zeros. If you have that right opportunity, spend the time to invest in your partner or in your, you know, in your life. You know, there's a lot of times where I miss probably a lot of social opportunities. I'm a sociable guy, but I'd probably say no because I got to go see a deal or put out a tenant or I didn't delegate. So I say that vulnerably that, you know, it's important to be diversified.
I would say the sociable one, based off of what I've learned about you, is not as important as the family one. Like, would you say the sociable one is even like a rounding error compared to the family one?
100%. Like, I mean, I'm a sociable person. I have my close group of friends. You guys ask me who are my people, whatever, and I'm just, you know, like, I don't need I have a million acquaintances, and people say they're friends. It's hard to have a million friends.
Yep.
I have a lot of acquaintances, people that I like, but I just know them on a peripheral. But close friends, you know, 5 or 6. And
But do you
most
need more
important
than that,
family.
really?
No,
Like,
I don't think you do. I don't think you do.
I really don't think you do.
Yeah.
And then like you think you missed out on the family stuff, but then like I had a kid at 22 years old, dead broke. Right? And I would, with my son, I'll be like, hey bro, chill, wrap it up. There's no need to get anybody pregnant. We can wait till we're 57. We can start a
Your
family.
son's already, you know, Dustin at 9. He's taking out, he's already, based on the
Wrap it
math,
up,
he's
son.
doing pretty good, right? Right? He's telling his son, wrap it up at 9.
Right? But I mean, like, that's a real thing because, like, I am the third baby in my family. So with my son, it's like, all right, bro, you can chill. We can wait till we're 57. I promise you it's going to be okay.
Right.
Set yourself up because, like, I got started where I was door knocking with my infant son in my arm, door knocking doors.
That'll
like,
help
hey,
you close for sure, but like,
oh,
I
bro,
need this deal. I got to feed him.
It diffused every situation.
sure.
And my son has been with me through, like, we've been through hell living off of bananas and rice for a year.
Wow.
But at the same time, I'd be like, hey, but that's my son's nickname. Bro, you can chill. Like, we can wait till we're 30, 40, 50. You'll be completely okay. Let's get the money in the bank. I'd say the hardest part would be financial aspect of finding someone who I could trust. Luckily, I met my significant other when I was homeless, right? And so like, there will be no prenups. I'll be fine. Like, we'll be okay. If she wants to take half of it, you probably deserve it. You made a good bet.
Yeah.
Right? And so that's, I would say, don't dwell on it too much from two
I
people
respect your perspective.
who've
I
been
hear
through
you.
it that way.
I get it. You know, look, the grass isn't always greener on the other side. You know, it always appears to be. But again, you know, envious that, hey, it's great that you have a kid and you got
You're like 9 kids.
5.
You have 5 kids.
He has like 9 kids.
Dang, super sperm over here.
Olympic swimmers, dude.
There you go. Yeah. We'll be cloning those bad boys. That's our next business venture, getting the Rogers sperm.
Right, getting the Captain America sperm,
Captain
bro.
America
That's what we
sperm.
want.
You could sell that for probably big money.
Oh, you
6'3", good-looking dude. We could get him. I could get 100,000 a pop. That's our
New
next business.
New business venture.
There you go. JV on that one.
I'll JV on. Last question. Do you JV with wholesalers? Like when you said get everything in writing. When you do like a JV or you bring in a wholesaler with that. You're like, okay, here's a DocuSign. Just sign this shit, bro. Like, trust
Yeah,
me.
I mean, it'd be important, of course, to do that. So let's say a wholesaler brought me a deal, maybe it's tight. I said, listen, I'll buy it at this, but I'll give you 10% equity on the back end when I sell it. So I'll send an email or a confirmation or a notarized doc that that's what
Yeah.
it is. But I'm in full control. They're not on title, but I would make
But
sure
you're like,
that they're protected.
you're safe.
Of course, of course. But also know that they're safe because it's me. But if it's somebody else, it's like, but I'm also in full control of the deal. But from a wholesaler's perspective, if you're going to get equity from someone, absolutely. Don't just assume, well, he said he was giving me equity. Well, what happens if that person gets incapacitated or, you know, they die or he sells it? There's no recordation of that. So it's important for them to statute of frauds, again, get it in writing so you're protected, or say, listen, I'll sell you the deal, Zach, but give me $5K up front and I'll take 6% equity on the back end, for example.
Yeah.
It just depends. Everything is negotiable. But of course, no matter the deal, put it in writing, for sure.
Hell yeah. I mean, Dean gets people to assign him deals at 0%. And then it's like, I'll just pay you on the back end, bro. Don't worry about it.
0% and nothing in writing just because, like.
What do you mean 0%? Like they're going to
So-
finance you?
No. So
No, just like
the
no money.
The clarity on that is, if I'm going to JV a deal with somebody,
Yeah.
they already have it under contract. Usually, I'll have them assign it to me first.
Of course.
And this is assuming we're going to assign it,
Okay.
right? We're not going to take it down and flip
Got
it.
it. Yeah.
They're going to assign it to me for $0.
Yeah.
Right. And then that gives me access and control of the deal. I go assign it to the end
Of
buyer.
course. Yeah, yeah.
I get paid at close of escrow, and then I pay them directly.
But don't you want a joint venture agreement even before? When you say zero.
I don't.
Well, you don't, but I'm sure they do.
We have a
They
really
don't,
tight
but I
community,
say, like,
bro.
dude, am I going to screw you over for
I get it.
$10,000, $20,000, even if it was $100,000? Am I going to
Take
burn
your
my
reputation.
reputation?
Of course not. But I'm just telling you from experience, what's the downside of just putting that in writing?
It's just the effort and the extra paperwork, and
It takes 5 seconds. I'm
just-
just saying, devil's advocate.
I understand what you're saying, 100%.
Yeah, I would want that. If I'm giving it, I'm assigning it to you, we're going to JV it. I mean, listen, I get it. There's to a select few people out here that I do a tremendous amount of business. You're right. We don't have everything
Yeah.
like that buttoned
I
up
mean, it's
because
like,
we
dude,
do so much
if
business.
if
it
my
doesn't
word
matter.
says we're doing a deal,
That's how I
it's
am.
done.
I get it. But I also want to protect that person.
Yeah.
I get it.
But like with you, Zach, knowing you and your reputation, I can make the asymmetrical bet. If he fucks me, and like he's burned.
I would never do that. Like, just like you, the reputation's
The
everything.
reputation
what I'm
risk
saying.
is too
I've never
big,
fucked
bro.
anybody in my entire life.
You've never
Retraded
fucked
nothing.
anybody.
It's never, no way. You
And so
can't
I
do
can be like,
that.
all right, Zach, bro, just fucking pay me 40% at the end of it. I don't care. Like, I know
I
it's
get
skinny.
it. Right. But that's what you want to strive for. That's being consistent and putting yourself out there and, you know, executing time and time again. It's about being the guarantee.
What are your final words for the people?
Don't overthink this. This is the greatest business in the world. If you're thinking about getting in this business, definitely get in. There's, you know, whatever you think is the restriction from you penetrating this industry, it's in your head. You can overcome any obstacle. Put in the work, learn the fundamentals. There's so many amazing people out there and free resources and people that want to see you succeed. There's an abundance of opportunity for everybody to win, especially in the single family market. We talk about the fragmentation of it, the ease of creating these relationships. So if you're a workhorse and you want to control your own destiny and be the captain of your domain and change the legacy for yourself and for future families and other people, this is the place to be. Watch these guys, follow our stuff, reach out. There's so many people that want to see you win. Take the plunge. Best of luck. And there's always a seat at my table for you.
Sweet, bro. Thank you so much.
Yeah, this was great, guys. This was fun.
So good.
Hell yeah.
Good energy. Welcome to town. Welcome to AZ.
Thank you so much, bro.
Yeah, man, this is awesome. Thanks again for this. This is beautiful.
For sure.
Been a pleasure. You guys are great.